Hi everyone, this is Chris from TPLI, Turning Point Life Investment, and this is going to be an analysis of the Russell and some other stocks for October 5th, 2011. Now, first thing that I want to go take a look at is a 9-month daily view of the Russell 2000. A couple days ago, the Russell was at support around 650, and then it broke it. And when it broke it, we were all saying, you know what, this was like actually a nice head and shoulders pattern. It had formed, it broke the head and shoulders pattern, but more importantly, it broke the support level. So we were saying, hey, the decision the market wants to make is move down. Then yesterday it formed a bullish engulf pattern that completely engulfed the breakdown day, and today there was more follow through, and it got back above 650, especially with the close. Now, because of that, we have to throw this support line away, and there's really nothing that we can take away from that level now. There is some resistance around here, around 697. This is also where the 50-day exponential moving average is coming to. Tomorrow, if the Russell continues to move up, we'll probably see it tag the 20-day exponential moving average and see what happens. If the 20-day holds as resistance, then we can see it push lower. If it doesn't hold, then we can see the rut definitely retesting these levels into late this week or into next week. Going into the NASDAQ, it's very similar. It didn't form a bullish engulf pattern like the rut. Oh, you know what? Excuse me. Actually, it did. Bullish engulf pattern is when the close of the white candle usually has to be above the open of the black candle, and actually this did do that. So it's a bullish engulf pattern, has some nice follow through. Once again, it's still under its 20-day exponential moving average, and we want to see what it does there. But if the 20-day exponential moving average doesn't hold as resistance, then we can see the rut coming back and retesting this $2,590 level, this prior high right here. But that's pretty, we got to see what happens right here at the 20-day exponential moving average, and if it gets above there, then pretty much it's going to move up and retest this prior high. So it still does look like there's some, however you want to say it, some bullishness left in this market just right now. Even if we know that the market's standing on its last two legs, it looks like it wants to move lower. Still looks like there's some buying going on, and the momentum for the last 2 days has been up. We're going to take a look at some stocks now. Apple formed a nice bullish engulf pattern today, got under its 50-day exponential moving average. So I'm very curious to see if Apple can actually get above its high that it formed yesterday and get like around 383 or so. Then we can see Apple breaking above this level and actually moving higher. Probably it will want to retest the $400 level, and if it can get above there, then it'll probably move up and retest that $410 level. If Apple is weak, then we're going to see it just chop around in this range between 360 and yesterday's high, and we'll just see it chop around a bit before it wants to make a clear direction of where it wants to go. Baidu is another stock that we've been taking a look at. It's been taking a it's been taking a beating, and there's some pretty good resistance level around 120. Stochastics is getting oversold, and there's some good support around 101 something, 110, around that level. So Baidu's pretty much stuck in that range, and it's gonna probably take a day, or maybe even longer than, or not a day, a week, or maybe even longer than that to make a clear decision of where it wants to move. Another tech stock is Amazon. Amazon's looking pretty strong. Very similar to Apple, except for it's pulled back to its 50-day exponential moving average. It actually formed a morning star pattern. And then, so if it can get above that high, down this line that I drew, get above 223 or so, it should have no problem retesting these prior highs around 235. Now, that's the bullish scenario, and I don't really see a bearish scenario yet, but I do see a type of choppiness scenario going on if Amazon doesn't want to do that. Probably be stuck between 200 and that previous high that I drew around 223, and maybe it'll just be stuck in this range, just moving sideways or so with no clear direction. Next stock that I want to take a look at is GLD, the ETF for gold, and GLD's not really been doing anything. It's been side trending a bit, and it's been holding above this 155 level of support. There is some resistance around 165 or so about a 10-point range. If GLD actually moves under 155, probably under this low that it formed on the 26th of last month, we can take the measurement of this 10-point range and subtract it from here, and we can have another downside target for gold. The next ETF I want to take a look at is silver, and it's also been holding above support at $27.50. Stochastics is pretty oversold, but that's about it. We have some sideways movement, hold above support, and this is about 5-point range or so. If SOV breaks under 27.5, then we can subtract 5 points. But until then, SOV and GLD, they've basically had some major sell-offs and then side trending a bit to basically correct or recover that sell-off that it has incurred starting last month. And a stock that I'm taking a look at to the upside is XOM. I know XOM is in the XLE, so I really want to see if the XLE can get some more bullishness into it. I want to see it get above this broken support level, which is around $62.20, and the 20-day exponential moving average. If I see XLE doing that, and then I'm taking a look at XOM, which is holding right under resistance at 75, then I'll probably be taking a long position in XOM. So that's what I'm looking at for tomorrow, or actually sometime this week. And then some shorts I'm taking a look at is Bass under $12.50. It did have a nice relief rally today, but if it gets under $12.50, I'm probably going to be taking a look at it for short. And then the next stock is AFAM. It formed a bullish engulf pattern yesterday, and got some follow through today, holding above its 20. So thinking about taking a short at this, but because of yesterday's bullish engulf pattern, I would want to see it move under that low. It might already be an extended move to the downside once it gets there. Plus, there was some pretty good high volume, so maybe I think I'm actually going to take this off my short candidate if it can get above this level of 17.5 or so. If it gets above there, I'll probably be taking it off my short list.